there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And, you know, that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place.
Fed Chair Jerome Powell, a renewed emphasis on housing and the real estate environment today at the Fed meeting after raising rates for 75 basis points. Also saying that there was weakened significantly is how he described housing in this environment, the one area they're seeing evidence of success beyond all else. Let's talk about that with Danielle Hill, Realtor.com chief economist. And so let's put a bow on this thing with advice for the homeowner. If you're sitting here watching mortgage rates continue to go up and a slight cooling off to prices, what's your advice?
So mortgages are going up. If you're a homeowner and you want to stay in your home, you're looking at record high levels of equity thanks to those price increases that we've seen. Interestingly, even if we do see a correction or even a pullback in housing prices of 10 to 20%, that would still put most homeowners, or at least in aggregate, homeowners would still have a record high share of equity. So most homeowners are in a really good position. I think it's important for recent home buyers and those thinking about home buying to make sure they're going in on as strong a financial footing as possible so that they are making decisions that can be sustainable for themselves in the long run. Don't push your budget. Now is not the time to do that in the housing market.
Tonight, another move that will affect your wallet. For the fifth time this year, the Federal Reserve raised interest rates by 0.75 percentage point. The goal is to save you money in the long run by slowing the economy and easing rising prices. But right now, it'll make borrowing money more expensive. So we dug into the impact these increases will have on your wallet. Now, the biggest increase will be on purchases for which you might need a loan. That includes credit card transactions and car and home buying as well.
Well, we talked about mortgage rates going up as the Fed continues to click interest rates higher. And the housing market is cooling down in the United States. So today, the National Association of Realtors reported home sales dropped in August, marking the 7th month in a row.
Sales of existing homes were down nearly 0.4% from July. That means the sale of single-family homes, townhomes, condos, and co-ops. That's nearly a 20% drop from a year ago.
In today's Tech Bites, two tech giants are reportedly cutting staff with growth now slowing down. The Wall Street Journal reports Google and Facebook's parent Meta are both looking to slash costs. They're reorganizing departments and urging some workers to apply for other roles in the company.
In late May, you told stakeholders to brace yourself for an economic hurricane. What's your current outlook along those lines?
That's being met by other forces, which we don't know the full effect of. That's war in Ukraine, oil prices going up, interest rates going up, inflation, and the worst possible outcome is stagflation. And so those things will absolutely cause a slowdown in the economy, at one point increase unemployment, and we don't know the full outcome.
How likely do you believe it is that the Fed will achieve a so-called soft landing, reducing inflation without an unacceptable decline in economic activity?
I do not like to make forecasts. I don't think I've ever seen anyone forecast the future properly. I think there's a chance, not a big chance, a small chance of a soft landing. There's a chance of a mild recession, a chance of a harder recession. And because of the war in Ukraine, I think and the uncertainty that causes in global energy supply and food supply, there's a chance it could be worse. And I think policymakers should be prepared for the worst so we take the right actions if and when that happens.